Hello, Chad Payne here, investment advisor with Security First Asset Management, with our weekly market update for the week ending October 13th, 2023. First of all, a couple of announcements. We've got our fourth quarter referral drawing going on right now. Anybody that refers friends or family to us during the fourth quarter will be eligible to win a $100 Visa gift card. So please take advantage of that and introduce us to your family and friends. Also, October 26th, we've got Mark Ballard coming to our Macon office to put on some design work and display for Christmas and Thanksgiving upcoming holiday season. So take advantage of that. It's filling up fast. Let us know if you'd like to attend there. All right, looking back at the markets last week, we had a mixed mixed time in the markets. Large cap value stocks led the way in domestic markets. We had some really good earnings reports from our banks, our large banks, especially with increase in interest rates. They've been able to take advantage of that and turn that into higher profits. Also, with the war going on in the Middle East, as you might expect, gold, energy stocks, and defense stocks all did well in recent headlines of the political environment and the war going on over there. Also, there were some dovish comments from the Fed. Most things have been hawkish for the last little while about continuing to raise rates. They think possibly we're at the end of the rate raising cycle, but they do contend that we may need to leave them higher for longer. But the market took it as a positive overall. Inflation, though, is still sticking around. Our most recent CPI and PPI reports showed that inflation was still pretty high. Has kind of stopped cooling off as it had been in the last few months. So that's a little bit of a negative for the job that the Fed's trying to do here. Finally, the IMF did upgrade the outlook for the U.S. economy to grow at a bigger rate than expected for this year as well as next. And it did not make those adjustments really in any other part of the world. It maintained the outlook that they already had for them. So that's a positive, possibly going forward for the U.S. economy. Also, just a piece of information that I thought was interesting. If you, instead of buying the new iPhone each time Apple launches a brand new one, if you had taken that same money and invested it in Apple stock, you would now have over 910 shares of Apple stock worth over $146,000. So probably a little better investment than the handheld gadget that you might be looking at right now. So anyway, hope you have a great week. Don't hesitate to call us if you have any questions, and we're here for you. Let us know if we can help. Thanks a lot. Have a great week.